Hello, everybody. Happy Friday. It is Dallas Trading Floor. Hope everybody is doing well this week. The market looks like it's pulling back a little bit. I was taking profits on Thursday, kind of anticipating this a little bit, but it's always it's always trouble when it comes to roost. The oils, though, I definitely think that we're going to see some movement into some of the oil stocks. The Nasdaq has been on tear, but it did pull back today. It's been up 5 weeks, so we're kind of expecting a little bit of a pullback here. So we definitely had that with the oil stocks, but I mean with the tech stocks. So, but I actually did buy Shopify today. So, it's not all grim news. Let's take a look at what's going on here. Basically, the indexes are mixed. The strength has been really in the spider and in the Dow, not in the Nasdaq. I wish it was in the Nasdaq, but it wasn't. That's where the strength has been. But there were, we did close on an upward note. I mean, we did close up a little bit on some of these indexes. Just wanted to go through the kind of the my version of a market prediction. And it's always tough when you're in the prediction business because you're usually wrong. But here's what I think. I think we're in this bound. I think we're in this. I think we're in this kind of this range going on a low from about 340 on the spider up to about 431. So currently, we were up just a tad, 0.23%. We did close at 408.04. That was where the spider closed. We definitely closed on an upward note, so that is indeed a good thing. And if we jump on over to the actual spider itself, put that up there for everybody to see. Yeah, there we go. As you can see, we're still kind of just, you know, we're above that. We're above 400, which is good. I definitely think part of the reason I think that we're likely to see some resistance here if we go back here. This is kind of where I start to see some resistance coming in about 431 here, and then the floor I think is right about here. That's kind of showing it. If we go to the weekly chart, you can definitely see this a little bit easier here. But if we go right to about the 431 area, why do I see it there? Well, the reason I see it there is because of this little promontory here. You see that's a little about 431, and then on the downward side, about 390. So right about there. So that's kind of the range that we're bound in. We're going up between there. We're making our way up, but we did pull back today. So I still in an upward trend, but we've had the market has been up essentially 5 weeks, so we're starting to see some movement there. But I definitely think that's kind of the range that we're looking at, and yeah, so I do think that that we will hopefully see some improvement next week. But I definitely think that there's a little bit of a sell off in some of the tech stocks. The earnings just aren't there in a lot of them. And so I think that, the big tech stocks you got to be careful on. The smaller ones are not so much. I think those you can look at kind of very, very well. I think those you can look at. I did buy Shopify today. The reason I like Shop, let's take a look really quick at this chart for Shop. I have owned this one and I did sell it. I took profits on it, but now that it's pulled back, and let's get a look of on the pullback here. But now that Shopify has pulled back a little bit, coming basically down to the 21-day moving average, and that's where I really like to buy. I really like to buy as it's hitting that 21-day. Now you'll notice that it did come down, didn't quite hit the 21-day, and then it looks like it bounced. So here is the 10-minute chart on Shopify. We came down here. This was the test here. And then we bounced off of that a little bit, and we're now above 48. So I'm kind of thinking that we might see an upward trend on this one. There was a lot of buying that came in at the end of the day. Usually they're selling at the end of the day. There was buying at the end of the day on Shopify. So that's kind of why I see that one coming forward. Also, I did put out a little video today on another stock. This is a oil stock, and not a huge company, not a company that a lot of people have heard of. It's called Permian Resources, and of course, the Permian Basin is the largest area in the United States for oil production, one of the largest in the world. I think it's, I don't know, it's, first or second. I'm not sure exactly. I'm not sure exactly where it comes in, but it's a big it's a big area. Um, it's a big area out there. So definitely something that's worthwhile looking at. Let's take a look at the chart for PR. And I did buy it right as it, really just right over 10. Again, if you've been watching me for a while, you'll know that I typically like to buy. I don't like to buy stocks under about $10, and there's a lot of reasons for this. It has to do with the volatility. It's just harder to control. I did buy it. I think at 10.46 or something like that. So it's up a few cents after hours. Not a whole lot, but what I like about this one, if you look at it, it's nice double kind of bottom there, and then there's this handle, and it looks like it may be making its way above the handle. Also, if you look closely, you'll see that we have way back here, we have the golden cross where the 50-day moves above that 200-day average. And also, you'll notice that there's a slightly incline here on the 200-day line. That means that funds are moving into this particular stock, and hopefully we can benefit from that. Not a lot of funds in this, but definitely have some funds in it. You definitely have some good fund ownership. We have about 393 funds in it, and that is, it's kind of consistently been moving up. And for a small, for basically a commodity play like this, that's a lot of funds in it. So interesting there. On the pattern recognition, it's coming up with a cup with handle, and it's right below the pivot. The pivot is at 11.15. Now, what does the pivot mean? Of course, this is what some people call this the buy point, and but we're right underneath that. We're buying it as it's reversing higher. Hopefully, it'll work, and we'll be doing good. The prior uptrend was about 26%. So, if it does move above this 11.15 here, expect it to move up to about 13 or so. That's where I'll be selling it. If that indeed does happen. It's got a 100% checklist, so that's a very good sign as well. On the technical basis, I tried to buy it as close to that 21-day line as I could. The 21-day line is right at 10.18, so just a little bit as it moved above that. That's where I tried to come into the stock today. All right, let's look at what I do own. And I'm going to show you the two new buys that I did have on there. But basically, Amcor, I'm in that one. That was down significantly. May have to do something there. I did buy back one of my options that I had. I had a call option on that. I did buy it back, and it made a little bit of money as the stock fell. But I really wish the stock hadn't sold, but I did make some money on buying that call option back. Also, Chevron, I'm owning that. Of course, that was up today, as was Exxon. And I want to show you the chart of Exxon because that is offering a very good buy point right now. Exxon is definitely in a buy range, and it's something that you might want to consider. Now, PI, this one had been up. It was down today. Very, very volatile. Again, I've been cutting back on this one. I've been selling part of my position here. Just trying not to get too far ahead of it. Of course, the XLE was up. That is primarily Exxon and Chevron. I have Chevron, but I don't have Exxon right now. That was up nicely. ST Micro. This is one that I did buy yesterday. It was down. So I thought I was so smart that I was going to buy that ST Micro, but it pulled back, as did a lot of the NASDAQ stocks. This is a Swiss-Italian chip maker, and it's been around for a long, long time. They make chips primarily for the automotive sector, and they've been doing pretty good, actually, as of late. They've had some nice earnings there. Again, when we talked about the Permian Resources PR, that was up today nicely. So I was gratified. ADHR Test Systems. This is in the semiconductor equipment space. I definitely like this space because we're seeing a lot of investment in semiconductors, and so the semiconductor equipment makers are getting a lot of that. And of course, we're talking a little bit about Shopify. Shopify did pull back today. I waited kind of until the end of the day, and hopefully I bought it, near the low of the day. That would be great if that was the case. I don't know if I did or not, but that's kind of the deal there. All right, let's get to some of the questions. Thanks everybody for watching on a Friday. All right. Okay, let's take a look at TikTok here. Lyft. This is a good one. Definitely should be talking about Lyft because Lyft it doesn't lift, it's fallen. It's really fallen off a lot. Lyft is not doing well. It was off today. Let's take a look at the chart for Lyft. LYFT. And it just, for some reason, I don't know quite why, but it just took a swan dive today, and it just was not what you want to see. What you want to see out there. But Lyft definitely took a dive. We were, this is why, you got to go with that. You got to go with the rule, and that is if something is down 7 or 8%, you just really have to unload it. But that went all the way. That was above the 21-day line, and then boom, all the way down. Just horrible. I mean, I'm glad I didn't have any lift. You can see this was the gap down here that we're showing. Not a good look at all on Lyft. I mean, who knows what's going to happen? Let's look at the weekly chart. Downward trend on the weekly chart. So down goes Fraser, if you remember that. Down goes Fraser, and I don't know why, but just people are just dumping it. Just not looking good. I hope you weren't in that disaster. Kind of like being in Turkey with the earthquake. Just a disaster all the way around. So I hope you weren't in that with that. Troy, thank you for looking as always. I knew that Netflix was going down. You were right about Netflix, boy. I tell you what, NFLX. I have Netflix, but I'm thinking about getting rid of it. Because I bought Netflix one. I have the Netflix subscription, and I got it because I wanted to get the sixth episode, the sixth season of Better Call Saul, and they haven't yet done anything with that. I really hate that. But I originally got Netflix because I wanted to see Breaking Bad. If you haven't seen that series, I think it's great. But that's one of the reasons I got Netflix, and I've hung around probably too long. Netflix definitely came down to the 21-day line. Now, this is one of the reasons why you want to buy as close to that 21-day line as you can, just because of this. Sometimes you're looking at, God, you want to buy it, but then it's too far. It's, 10, 15% above the 21-day line, and, you buy it and then it collapses. But right now, according to this, well, if it wasn't in a downward trend, this would be a good place to buy it. But I don't think it is. They came through earnings, and it just didn't look good. It's kind of handled out here. This is sort of a cup with handle, but the relative strength line is moving lower. Not a whole lot of volume, though, interestingly enough. So, but Netflix 56 checklist. This kind of tells the tale here. You don't. This is one of the reasons why before buying something, I really like to have 100% checklist if I can get it. Not that I can always do that, but just unfortunate with Netflix. Most of the big cap techs have been struggling as of late. I mean, there's a lot of carnage out there. Now, that said, I mean, there are some opportunities in some of the smaller techs. Now, of course, I'm bringing up, maybe I'm tooting my own horn here, but with Shopify, this is one I do like because I think it's so. It's sort of, they go after the middle market, and I really like that. Now, this one's pulled back as well. I've been waiting on this one. This is sort of a cup with handle. Now, hopefully, we're going to get some support there. Let's take a look at the 10-minute chart. I think we're getting support there, but you never know. But we're starting to see some volume come in as well. So hopefully that's right. We'll see. We shall see. But anyways, it's going to kind of gives you an idea of Shopify, why I do think that it may have bottomed out. All right. Well, thanks, Troy, for that. I do appreciate it. What? Well, okay. Could you share your thoughts on Semi? Now, if you watched me yesterday, you know that I did take profits on. Great company, but I do kind of, I think there's a shifting, and I think this tides are shifting a little bit away from some of the techs right now. This one did do a little bit of a sell-off. Here's the thing. Usually on Friday, it's going to accentuate what's been happening for the rest of the week. That's definitely what happened here with On Semi. But with On Semi, if we look at it, we came up here nicely, and then we've broken the trend here. But we still have this is still a very strong stock. 89 is the relative strength, which is excellent. It needs the problem, of course, is that the sales. This is one of the reasons why you want, and I know there's so many rules that I'm throwing out there, but you typically don't want to hold through earnings unless you're up 10% or more. And the reason why is this very reason, because a lot of times, what they say, buy on rumor, sell on news, and that's what happened here. They had a good earnings, but you see, I like to sell right before earnings, and there's a reason for it. Even if the earnings are good, sometimes they're not good enough. And that's definitely happened here. I mean, it was up 14%, which is very, very good, but it really wasn't enough. I mean, it needed to be 20%. The profits were up 20%. So this is one of the reasons why, if you have a situation where you are, if you have this situation, you typically always want to sell prior to earnings, because this just this just kind of reinforces the point here with the fundamentals. Even though we did go up in terms of earnings, the overall went down. So, but it was still a good stock. But again, this is why you don't want to hold through earnings. You want to be very, very careful. You want to look to see where the earnings are, and you don't want to hold through them, because unless you have usually a larger amount of shares, usually a larger gain, like 10% or more. Sometimes when we come to earnings, they will, they'll sell off. I mean, it'll definitely sell off. All right. Got a lot running. It says, oh, okay. Well, let's take a look at this here. Could you share your thoughts on Semi? Well, here's the thing about On. Great company. I do think it's going to hopefully continue on the upward trend. But here's what I would start doing. I would start reducing your position, because I do think it's going to pull back a little bit. That's my guess with On Semi, because of just the way it went. This is why it's when you buy a large position in a stock, remember, try not to hold it through earnings. Try not to hold it through earnings, because this is a issue. This is an issue. So, you might want to reduce your position a little bit. If you have more than 100 shares, consider selling a call option against your holdings, and that way you can protect yourself on the downside a little bit. But I definitely think it's still a strong stock. It just, you just don't want to hold it through earnings. That's the main thing. All right. Better Call Saul is my favorite show as well. I love Better Call Saul. Oh man, one of my favorite shows of all time. All right, Troy, thank you. Let's look at NOG. That's Northern Oil and Gas, and it's a good stock as well. NOG, and one of my people that I work with is leaving for the day. All right, let's see. Let's take a look at Northern Oil and Gas. It has shown some nice action, and I do think that we're going to see, at least for the near future, we're going to see a little bit of movement back into the oils from where we were. I actually think we're going to see that. back into the oils from where we were. And but nice move up today. Very nice. And so definitely investable. 86 relative strength. I like that. That's very good. If you want to buy that though, you need to buy it soon because it's basically at the 21-day line. You're really not a good idea to buy it too much above that 21-day line. But one of the things I want to show you about Northern Oil and Gas, 100% checklist. So Troy, you have a winner there, as you often do. You have a winner there, and I think this is one that might really stack up. All right, let's take a look and compare it again. Let's compare this Northern Oil and Gas. I'm kind of, just for fun, I want to go back here 1/1/2023, and that's going to give you the idea basically what's going on in the last month for that. So let's put that up on the screen for everybody. There we go. So here we go. Northern Oil and Gas. And this is the Northern Oil and Gas chart basically for the last month. And I'm going to add here ExxonMobil, XOM, to see kind of how it, okay, so very similar. So let's add the XLE. This is the Spider Select for the energy sector, XLE. Okay, so XLE is lower performing, ExxonMobil lower performing, and Northern Oil and Gas, like that. Just take a look at another one I just bought, PR. A little bit better than Northern Oil and Gas, but Northern Oil and Gas is a better company than PR. But I did buy PR today, so Northern Oil and Gas definitely a winner. Thank you for that, Troy. And as you can see, basically the explorers are moving up, and they'll probably do well next week, based on kind of what I'm seeing there. They'll probably do well next week, based on that. All right. Where you trade, which platform? Okay, I use a number of platforms. I use Charles Schwab. I use TD Ameritrade, and I use Fidelity. Those are my main brokers. And I do use MarketSmith, which is the software that I use for charting. It's very good. It's kind of expensive, but I think it's well worth it, based on that. Okay, question from TikTok. AAL, American Airlines. Let's look at the American. The Travel and Leisure Group has been doing well as of late. Let me see. I mean, I have a list of the groups that are doing the best. Let's see if I can get that. I don't know if I did that or not. Well, one thing I do know is that it has been, the Travel and Leisure Group is starting to wake up, and of course, it's starting to see some good stuff come in. So we'll see how it does here. But let's put up American Airlines, AAL. Oops, wrong slide. There we go. Go to the right slide here. American Airlines. And I'm looking here at the weekly chart, but I'm going to jump on over to the daily chart just for fun here. It's coming up, it's sort of handling out. This is what they call a handle. And that's sort of a flag pattern, 72 relative strength. I don't know. I'm of two minds. Some people would say this is a flag pattern here. It came way up and then it sort of, but the problem is this is an exponential scale. So I can't really say on this. They did just come through earnings. The earnings were good. Sales were up 40%, and the profits were up 182%, but they're coming off a very low base. Here's something that I'm a little bit worried about. PE ratio of 56. I don't really like that. So I don't think, I don't really like this group for a lot of reasons. I don't like this group, but I think American Airlines, it might go up, but I think they're just better places to be fishing for stuff right now. I just think that's the long and the short of it. All right, let's look. Oh, Snap got another blow. Okay, power MOSV feed. Okay, so let's look at Snap. You know, here's the thing: you don't want to, even though it's tempting, you don't want to trade last year's news. So this is why you need to look at, if you're trading tech stocks, it's not just what did well a year ago. You got to be you got to be kind of going with the now. Snap, of course, is one of those ones that was tremendous, but at $10 a share, I'm really leery about it. Now, the reason I did buy $10 a share stock, that was Permian Resources, but it's a commodity stock and it's coming off a low. Here's the problem with Snap, of course, is that this chart, this is the weekly chart, is just horrible. I mean, you go down there and then if you draw a line, all kinds of overhead supply. It's just, wow. It's just something you want to be involved with. They had a basically no change in terms of their sales. Their sales are basically flat. They're losing money, and their PE ratio is 61, and the return on, so it is going down. This is not where you want to be in the market. It's got a 9 relative strength. That means that basically 91% of the market is stronger than Snap. So we don't want to be in Snap. Snap is just not looking good. Put that up on the screen for everybody. Just kind of go through that again. But 9 relative strength, not so good. We did come up to the 200-day line, just barely. And there are some stuff that's coming in. I don't know. Maybe I'm wrong, but I don't think it's gonna gel. I think it came up. I don't think this is gonna react like Tesla did. I think this is gonna not do well. So I would be not in Snap at this point. But Shopify, I definitely like that one. So there you go. There you go. All right, thought on Toast. This is also a technology company. I think it's TOST. I'm not sure what the symbol is. TOST. Yeah, Toast. There we go. Okay, I got it right. Toast, of course, is a restaurant-based point-of-sale system company that has a lot of adoption. One of the great things about Toast that I do like, and I have seen this software, is that it basically creates that online ordering capability for many small mom-and-pop retailers that are in the restaurant business. So I definitely like that. So it connects with the internet. It's the whole point-of-sale system, so that you can do the online, you can do the DoorDash, you can do that kind of stuff, which has become increasingly important in the restaurant business. So I do like the stock. Now, the question is, would I buy the stock? That's the two different things. I like the stock, but would I buy it? 78 relative strength, that's looking good. The technical's not bad. I want to go over and take a look at the kind of what's going on here with the relative strength and everything, because I always like to buy stocks typically that are the strongest that I can get in the best group. Now, leisure and this is in the finance credit card group. It's kind of really a misnomer because it really is in the restaurant group, but that's sort of where they are because they do credit card processing. 88 relative strength, I like that. It does look like it's just touched the 21-day line. Yeah, it's 3% above that. So that would be a good place to possibly buy it. Let's take a look at the pattern rec on it. We are buying below the buy point. I like that. So yeah, I mean, it does look good. I mean, this, you definitely could start nibbling on this one. I definitely think we're going to get a reversal here as it came down to the 21-day line. The 21-day line basically being right here at about 22. There we go. And it came down and making a nice bounce off of that. Also, towards the end of the day, nice volume coming into the issue. So I definitely think that that is looking good. TOST, and that is Toast. So TOST is the symbol that we're talking about here. And I think that could be potentially a good one to go for. All right, we're probably at the last today. Okay, thank you there, this. All right, let's take a look at AYX. See if we can see anything there. AYX. that is a okay software self-service software. I'm not familiar with this company, so that's why I'm kind of a little bit in the dark. So let's go over to the chart, take a look at it, see kind of what's happening with that. AY self-service software. Okay, pull it over there. There we go. All right, boy, look at that. It is just wow. It's it's moved above the 200-day line. This is looking like this looks like a breakout. Something's going on here. 62. It was up 500% today. Wow, that's very interesting. I wonder what's going on. Let's go over to the 10-minute chart. Okay, well, it's down a little bit after it's gapped up, and then it came down, and then it looks like it's settling at about 63, but lots of action. Look at that volume. Whew. That is a lot of volume today. Was it earnings? I wonder why it's gone like that. Let's check just a quick check on earnings to see. Okay, let's look at earnings. Well, okay, no, yeah, I see 73% sales increase. Oh yeah, 367%. So this is on earnings. So this is why it moved like this. Cash flow is nice. Well, they're holding even with their number of funds. A minus in terms of accumulation. Interesting. Let's see what their estimates are. Wow, they're saying they're going to be up 400% in this year. So yeah, that's very strong. But and the question is, yeah, and so yeah, I see, and it just moved above that reversal line. That's the reversal line. A lot of volume coming in there. Interesting stock. It's in the computer software database area. This area has, the area that the stock to look at in this area, in my opinion, is Snowflake. And what I want to look is I want to compare this one against Snowflake because that's the stock that I really have been looking at. Okay, let's look at Snow. And move over to that. So the two stocks that we're kind of looking at here, are ServiceNow. I mean, AYX. That's a Snowflake and AYX. So this is Snowflake. Essentially the same, kind of tracking the same, but definitely interesting. So these are the two. This is interesting. So this group. Let's see if we can go back to this. Let's see if we can go back to this group and see if there may be an opportunity here, because there may be an opportunity here. And I'm looking at computer software database. I want to look at the leading companies in this group. And kind of move over there. This is the computer software database group. So we have Box, we have Progress Software, New Relic, Splunk. That's interesting. So none of these really are really doing the strongest of the ones is Box. So that's interesting. And New Relic and Splunk. So they're all those ones above. Right. So that's very interesting. Sorry. So my thoughts on this one are it's looking very good against a Snowflake, which is very highly rated. But I want to compare this one against one of the ones in the group that's doing the best, and that's going to be Box. So I want to compare that to Box. Let's do it. BOX. So yeah, I mean it's at least at least comparing the two here, it does look like, yeah, I mean, AYX is definitely outperforming, at least in the last month. Of course, in the long term, we're all dead. So it's actually, yeah, so it's outperforming Box, which is the top rated one relative strength wise, and Snow. So I say that, yeah, you're definitely onto something here, and it definitely looks like it, could be potentially acquired. I am not that familiar with the stock right now. This group has been low, but I think that we probably will. I'm a little bit afraid. I think that this downturn today is showing that if these tech companies disappoint, they're going to be punished. And I think that there is a trend, though, that moving back into some of the oil stocks. So I'd be a little bit careful buying. I'd be a little bit careful buying here. But anyways, hopefully that's pretty much it for today. Thank you so much for taking a look at the show, as always. And if you aren't already a member of Dallas Trading Floor, well, it's easy to do. You just go over here to you just go to www.Dallas Trading Floor, and also please like our show. We definitely, that really helps us get out to a lot of people. If you smash if you smash the like button, that really helps us big time. So smash that like button. And if you're not already a member of Dallas Trading Floor, it's super easy. Just jump on up to, if you're watching on TikTok, just go to my link up here and click on that, and you can join for free. So I will be back on Monday, and I hope to see everybody back here again, but I'll be back on Monday, hopefully with some good lists of potential stock. I definitely think we're moving. Be careful about the tech sector right now. I definitely think we're getting a little bit of a pullback. I'm seeing the oils do better than they have been. I think we're going to get some stability there, and we could possibly be moving back into some of the oil stocks. So I don't think the oils are dead, but be careful buying the tech stocks. I'll be back on Monday at 5. Happy trading, everybody.